Okay, so I only normally drop information like this to my mentorship program, but I'm feeling kind of generous today. So this is the short I'm planning. Not financial advice. It is Sunday when the market's open, and you really should trade during a kill zone, but this one looks juicy, so I'm going to take it. All right, you may not understand these concepts, but that's okay. This is advanced stuff. So 4-hour fair value gap. So I'm bearish from my Goldbach algorithm short, so that's still running. The market did a market maker model as per my previous post. We broke below and we went back into this 4-hour fair value gap. So let's zoom in and see what happened. So within that 4-hour fair value gap, we overshot it a little bit, and we overshot it for a, sorry, this should read 15-minute. This is a 15-minute fair value gap here. Let's just rename that now while I'm here. There we go. So we overshot the 4-hour a little bit to get into the 15-minute. Now, I like trading the market maker models combined with Goldbach. So we need more confirmation than that. So if we look at the 5-minute, we have a mess, right? This looks like a mess. However, if you understand advanced order flow, this is the perfect setup. So here's the magic. And my laptop is overheating right now. So let's see if I can get this rolling. Okay. So what did we do? This is a long-term high. This is on the 4-hour. This is what took out or rebalanced the 4-hour fair value gap. So this is the long-term high. We created a short-term high. Then we created an intermediate term high. This intermediate term high threw all this liquidity, swept all this liquidity into this wick. Now, how much detail am I going to go into? All right, let's do it. Now, I'm going to give you some crazy information. When you're looking at prices live, levels are respected to the pip. But when you replay price back, the broker feed that you get is not the same as it was live. So when I was running this live, 50% of this 30-minute wick, this level, this level, this level, this is all respected to the pip. We would not close above it. Right now it's off now because we're getting old prices or a modified price, but when we were running it live, that was to the pip. So I mean, I might have a screenshot. I have an old video that I was posting, but don't know if I'll show that, which had the live prices. Anyway, intermediate high swept into the wick. We did not take this long-term high. What did we do here? This candle, what is it doing? It rebalanced this fair value gap into this order block. This is a balancing candle. We then took out this balancing candle. Now, when we violate a candle that's balancing something else, this is a major indication that the market has switched. So this was a bullish market because it was addressing this fair value gap. But as soon as we violated it, we are no longer fully bullish. So this is my first heads up. The second one is, look, this is a bullish order block. We violated it later on. So the algorithm is telling you it's no longer bullish. We're not saying we're bearish, but we are no longer bullish. This is where the magic is. We need to look at order flow and see if bearish order flow is being respected. So this candle here took out this balancing candle, so I put an X around it, and then we left a bearish 5-minute order block. We then came up, created this intermediate high, or this short-term high. We then swept this liquidity into this 5-minute order block. This is a major sign that we are now bearish, because we are respecting bearish order flow. We are violating bullish order flow. We then had massive displacement, and it depends what chart you look at. This is now your 5-minute order block, which you can come in on. So I'm going to short it right here when the market opens. We also have a 5-minute fair value gap, which is an additional short. Now this is the bit which Hopelika will like. Check this out. So if you then put on the Goldbach levels, remember what I said, order block, there's a fair value gap here, prepare to be blown away. Now you might not understand what this means. These are the Goldbach levels. It says an order block should form here. There's your order block. It says a fair value gap should form in here. There's your fair value gap. Then there's a liquidity void where we just went down. We created a breaker in the breaker zone. This is now called Algo 1. High to X, I like breaker. Went into the order block, tapped the last few orders, and now we're going. Even this level was respected to the pip. If I can put up the price of this, the bottom of this GB level. Come on. It's not letting me see it, but look at this. It's now tipping its hand to what the algorithm is doing. This is institutional order flow. Now, normally my entry would be this. It would be something funky, like maybe this. Potentially this. But as it's Sunday, when the market's open and there might be some volatility and brokers like messing with you, I'm just going to put it at this long-term high. And as soon as the market opens after my workout, I'm going short, baby. This is real institutional order flow combined with the Goldbach levels. Hit me up if you want more info, but people aren't going to tell you this kind of stuff. Spread the word. I'm going to show you on my Twitter, on my Instagram. This is my Instagram handle, AirCamTrader. It's private, so you'll have to send me a message and say you found me on Twitter, and then I'll add you, and you can see crazy stuff like this. Give me a shout if you have any questions.